Welcome to the Rick Helps Real Estate Show. Boy, Arizona condos are taking a hit. Now, you've heard us talk about condominiums quite a bit, not quite a bit, but a few times here on the channel, and saying that they're a bit of a challenge. And I've had people reach out to me and say, "Can you do a deep dive into the condo market for me?" And now I've got some more numbers that I can share with you and start that journey down that path. But condos are tough right now. I'm going to show you what's going on in the price per square foot, and then explain to you what it is that's making them so tough to sell. And here is where we're at right now, is showing that our price per square foot, this is on monthly average sales price per square foot, is going down, and it's down to about June 2023 numbers. But the direction is definitely on the downside, and it's saying that here it says the submarket's pretty cold. As a result, prices have been declining on a declining trend since fourth quarter of 2023. With the current imbalance between plentiful supply and weak demand, we anticipate further price weakness in this segment of the market. Luxury condos in expensive locations are not caught up in this downtrend, as supply is limited and demand remains reasonably strong. HOA finances tend to be in better shape in these communities, although there are exceptions. And then you can see here's the 6-month moving average sales price per square foot. And it says, because it's a much smaller sample size, we changed the chart from monthly average to a 6-month average, and the price range from 500,000 upwards, and dwelling types are condo, townhome. For the higher price range, the closing price square foot trend is looking positive. And that's for all condos. So in other words, the upper end is not getting hammered. Now, I'll show you some numbers here. I'm going to try and make it a little bit bigger, but let me first say what's really going on here. And it's not that condos have lost their luster and people like single family homes better. There's some of that, but it's insurance driven. HOA fees. HOA fees have gone up past couple of years, gone up quite a bit. Their maintenance costs have gone up. Their insurance costs to run the pool, etc. But it's mostly insurance, and insurance has gone up for a couple of reasons. California gets hit really bad with these insurance companies. They got to make it up somewhere else, so it goes to these UNI. Everybody's insurance has gone up. But what's really been a problem lately, and you heard Pat allude to it last month, talking about a condo that him and Jessica were trying to get closed, and they did get it closed. But getting what's called this insurance liability certificate. In other words, they have to show that the complex is insured at the value of what the building is. So, and a lot of these people are falling short. They're not playing catch up. So they've got inadequate insurance. Well, when you have inadequate insurance, you can't get the funding. And the other hard part is the people that do have adequate insurance, they don't know where to get it. There may be 20 people working for this HOA, and only one person that's outside of that HOA knows where that damn certificate is. That's what happened with Pat's. Oh yeah, we got one. It's right here. 2 weeks later. And so they were able to get it funded. But some people are finding out at very last minute, oh yeah, they're not insured properly, and the whole deal goes south. Now you're sitting there going, how am I going to get a buyer? You can get it maybe conventional, but you can't get it FHA. The condo complex isn't warrantable. Some of the condos have too many renters in them. So there are rules with FHA financing on how many owner occupants have to be in this complex. And if there aren't enough owner occupants and there's too many renters, again, you won't get the loan. So it's not a warrantable complex. So you're in trouble there. So it gets very, very complicated. And all of these things, agents need to do the footwork prior to listing the property. Find out if it's warrantable. Find out if they've got that insurance certificate, instead of waiting, just listing the property and then finding out in the final hours that, oh gosh, I'm not going to get funding. So what's the impact? Well, here is, I'm going to try and make this, well, tell you what, I'll use my handy dandy magnifying glass. This is a table showing the contract ratio. So it's showing single family residents. The contract ratio for last year was 56.7. That's the ratio of homes that were listed that sold. And it doesn't mean that only 56.7% of the homes got a contract, but it's a ratio. It's just a measurement. but it dropped to 38.1% this year. So that's how slow the market is. That's a drop of 32.8%. But see that number below? That's condos, apartments, townhouses. They have dropped 55.4% in their contract ratio and 48.7% in patio or townhomes. Below that is Gemini's, twins, and patio homes. And then finally at the bottom, mobile homes. So they are not, mobile homes are the ones that seem to be performing better than anybody else, mobile homes and patio homes. But condos, townhomes, you're getting beat up pretty bad. The interesting thing when I go and I look though too, when it's saying that there's an increase in supply, is that I'm not seeing them really getting hammered on the months of supply here. So the months of supply for condos is 4.2 in our market. Between 4 and 6, they say, the experts, that between 4 and 6 is normal. If I factor in everything, our market is 3.4. If I remove condos from this months of supply, it's 3.3. So it's not really a big impact. So they're 1 month of supply larger than single family houses. What about price changes for condos? Well, they're kind of humming along where everybody else is, the price cuts. You can look at all here and see that our entire market's got quite a few price cuts, but the trajectory for the past couple of weeks has been down. If I just look at condos, we can kind of see the same pattern. The people are having to reduce their prices. But here's one of the challenges. Most condo owners are not sitting on a huge amount of equity like single family homeowners, the majority of them. They got into condos maybe with 3.5% down, maybe 20% down, but as a rule, they tend to finance them FHA. And so they're not sitting there with $200,000 in equity like a single family house is. So therefore, they can come down 40,000. Yeah, it's a hit on what they thought they were going to get, but they're still able to do it. Condo, not so easy. There isn't that much equity in these condos with the current homeowners. So what are they going to do? Well, probably going to stay put, maybe rent them. But some of the condo complexes have put a moratorium on renting. In other words, we've hit our number. In other words, to stay warrantable and stay within that threshold of a certain percentage being owner occupied, they're going to tell you you can't put it up for a rental. Well, I'll make it a short-term rental, an Airbnb. Well, there's restrictions there. You probably can't do that either. So for the most part, you're stuck. You can rent it and hope nobody finds out. That always ends up paying dearly. It doesn't work out that great, and hope that the expenses come down, but it doesn't look like you're going to see any relief in insurance lately. Now, am I advising you not to buy a condo? No, I'm advising you to do your due diligence. Have the agent find out if it's warrantable. Find out if they've got the insurance certificate. All of these things before you enter into a contract. Otherwise, you may just be wasting your time. They're difficult. There's a lot of them out there. There's more choices for you. Some of the prices are looking pretty decent. They're not bargain basement prices. But if this situation continues and they don't get a better solution for this insurance crisis that they're facing, you could see prices continue to go down, down, and down. Like anything else, we're from the government. We're here to help. We're not seeing a lot of relief when it comes to insurance. So I hope that helps. If you have any questions, shoot me an email at rick@rickhelps.com. And do me a favor tonight, sign up for my newsletter. The link is down below in the description so that you can get it Monday morning at 7 o'clock, where I give you updates every week. Have a great Memorial Day. Take care.